Hello and welcome to this podcast. In this final podcast in our series on general deductions, we're going to have a look at a past exam question and try and determine how best to answer these kind of theory and discussion questions. So here's our question. A local retailer recently had to pay a settlement amount to a manufacturer for introducing its own in-house product that infringed on the design of the manufacturer. The product was introduced in 2011. The dispute went to court in 2012, and judgment was given in favor of the manufacturer in 2013. You are required to write a memo to the financial accountant of the retailer to advise him as to whether the settlement is deductible, and if so, in what year the deduction should be claimed. Let's have a look. So first of all, if it asks for a memo, you should lay it out in memo format, and that will be worth a mark or two. Now, approaching the solution. The first thing you should do is identify which part of the Act we're in. So our first part of the answer says, in order for this payment to be deductible, it must have been incurred as part of a trade and it must meet the requirements of Section 11A of the Income Tax Act. If we're talking deductions, we should mention both the trade requirement and Section 11A, since technically the trade requirement falls outside of Section 11A. Once you've identified the section, you need to identify what are the issues that are to be debated. Some things are clearly met and some things there's less certainty. So it is clear that the amount arose as part of your trade. We're not even going to debate that. The relevant parts of the Section 11A definition are as follows. Is the amount in the production of income? Is the amount capital in nature? And when was the amount incurred? I would suggest you work through either in your head or on paper each of the criteria and decide for yourself whether it is so certain that it doesn't need to be discussed or whether there is uncertainty. If you don't work through them all, you might just grab the first one that's uncertain and miss some of the rest. So we're going to look at each of these things. And in each thing we're going to look at what is the principle, what case does that principle come from, and how does that apply to our facts. So first of all, we're trying to work out, is the amount in the production of income? So an amount is incurred in the production of income if the risk of incurring the expenditure is a necessary concomitant of your trade or income earning operations. That's the principle. That principle comes either from PE electric tramways or from Joffe or from Rendell. Those cases are interconnected, but I suppose really the principle in its final form comes from Rendell. So the second mark will be for identifying the case correctly. And the third mark will be for applying it to the facts. So there are two possibilities. Firstly, as you are in the business of selling many in-house products that respond to market demand, it may be considered inevitable that a product may at some stage infringe on the design of a similar product. That's one possible conclusion. Alternatively, the courts may consider it unreasonable to expect such claims to arise in a retail business such as yours. That's the other possible conclusion. And then I think maybe it's worth mentioning the issue of negligence. It should, however, be noted that the possibility of negligence does not necessarily mean that an amount is not in the production of income. Second issue, in order for the amount to be deductible, it must also not be capital in nature. An amount is capital in nature when it adds to the income earning structure of the business, or when it results in enduring benefit. That's the principle. Those principles come from New State Areas or British Insulated and Helmsby Cables, respectively. So second mark, identify the case correctly. Third mark, apply the case to the facts. This payment has not resulted in any enduring benefit to your business and therefore is not capital in nature. So 1 mark for the principle, 1 mark for the cases, 1 mark for applying the principle to the facts. Third issue. If the amount is considered in the production of income and is not capital in nature, it must be deducted when it is actually incurred. This is when an unconditional liability exists, and if the amount is uncertain at that time, an estimate can be used. Again, principle. That principle comes from Edgar Storrs, another mark. You might also want to specifically look for cases that are particularly close to the facts in the present scenario. So, a case specifically revolving around disputes was golden dumps. So it's worth mentioning that case specifically. If the amount is the result of a dispute, then there is no unconditional liability until the result or the dispute is resolved. Again, principle, case reference, that comes from golden dumps. And resolution may be either by a court's decision or binding agreement between the parties. That's just explaining the principle further. Some more relevant cases: prior to an unconditional liability being established, no deduction may be made for a provision for the expected outcome. That comes from Nationale Pass. Again, we just put there automatically our memo format, but let's apply the facts or the principles to the facts. The unconditional liability arose in 2013, and the deduction should be claimed at this time. If you have any further questions, please feel free to contact me and some sort of sign-off. So I would suggest your approach needs to be identify which section we are going to be debating, identify what criteria within that section are uncertain, plan your way through what are the principles that apply to the uncertain criteria and where did those principles come from. There may be more than one case and there may be more than one principle. Don't bother to give stuff that is clearly not relevant, but look for cases that are the most similar to the circumstances being debated. And then apply those principles to the facts and come to a conclusion. I hope that helps, and I would suggest that you practice these examples and get used to having a format for how you're going to answer theory questions. Good luck.